Unemployment claims came out this morning. Let's see if they do anything to markets. So far, nothing too big. Okay, 221,000 jobs came in a little better than expected. 221 compared to 234K expected. Market largely unchanged. A little bit of a bounce off of indices. I wouldn't be surprised if we see more of a bounce off of that number. I mean, having a little good news goes a long way in a market that is terrified, right? What about the euro? Yeah, we have ECB stuff today, right? Yeah. So the European Central Bank did in fact go through with the cuts that were largely expected. And we have the ECB press conference starting in 15 minutes. Let's take a look. Dollar index sharply lower and then bounced back here on the unemployment claims. Let's take a look back at our individual views so we can take a look at the euro here this morning, see how that is behaving. Let's see. So the European Central Bank cut rates this morning. Euro has been on a steamroller to the upside, by the way. Really strong rally here for the euro. And you know what? The euro, for a while, I've been pretty cautious on the euro. But look, what was my pledge this year? My pledge to myself is to stay systematic this year. So can I just be real with you guys here? I talked a little bit about this yesterday on my stream, but I was discussing this with Forex James. He was on the stream yesterday, and I made this point. The Edge Finder is a system. It is an algorithm. It looks at data objectively. It doesn't have emotions. The Edge Finder is a system. And I've been saying on my channel, this year, 2025, my goal is to be more systematic than ever. And what I mean by that is the Edge Finder is my compass, okay? The Edge Finder spotted the pound bullishness and the euro bullishness, and my brain is like, oh no, euro, pound, those have been in such downtrends, there's no reason. This is why I say systematic trading is what I want to do, because my brain sometimes get in the way. And I imagine many of you guys experience this. Look, I've been trading for a long time. I've placed tens of thousands, but thousands of trades easily in the markets. And my gut feeling is not what has made me, a profitable trader overall, right? It's systematic trading. It's so important. It is so critical that you're not making decisions with your brain or your heart or whatever. Take your pick. A system is for the best when it comes to trading. Like something that just gives me a binary yes or no in terms of how's the fundamental look? How does the economic data fall? And look, the Edge Finder has been so spot on about gold, about the dollar, about the pound. It's been bullish on the pound for a couple weeks, and the euro. Now the euro is getting a bullishness. Look, I am going to be systematic this year. What that means is I'm not going to sit here and in my brain be like, oh, well, I don't really love the idea. Like the UK's got problems. Yes, it has problems, but systematic trading means we look at the surprise index here on the Edge Finder and we say, look, is the UK's economy in the world's greatest state? No, but it's beating on a lot of forecasts. For example, the UK, do I think that the UK is going to be this new superpower? Well, I mean, not new, it's been a superpower for a long time. In fact, many would say it's a retracing superpower or a declining superpower. But that little thing that I just did right there, that's thinking with your brain and your heart and trying to be super speculative. When I say trading systematically, I say, look, okay, the actual data is falling better than forecast. And we see that in the surprise index, which is mostly blue for the UK. The surprise index is a core component to how the Edge Finder scores stuff. So right now, I don't know how it's going to look in 6 months. Look, I'm not a fortune teller and I'm not a speculator. That's not how I make my money in the markets, right? I don't speculate on what the UK is going to look like next year. I don't speculate on if, Trump and Elon Musk's activities are going to massively improve our scenario. I have an opinion, but it doesn't really matter from a trading perspective. From a trading perspective, systematic trading means I look at the data in front of me and how it's falling, and I trade that environment until it changes. Does that make sense?
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edge Finder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
Right? Because again, is the UK economy great? No, it's not. They have high inflation, sticky inflation, slow growth, right? Not the greatest in manufacturing PMIs, decent services PMIs. Retail sales are a little bit upbeat. Is it great? No, but it's behaving slightly better than forecasted. That's all that matters from a trading perspective. That is what we have isolated. That is what the Edge Finder specializes in, spotting divergence between expectations and actualizations in data. That's why the Edge Finder is my system. That is why I stay systematic, because it spots that stuff better than I do. I can sit there and think through that piece by piece. Yeah, sure. But the Edge Finder was weeks ahead of me in spotting, hey, the pound might be bullish. Hey, the pine. So when I say systematic, I mean systematic. The Edge Finder spots stuff quicker than I do. And in some ways, that's a little scary because systems becoming smarter than you is something that I think we're all getting used to with AI and all that. But to see my own system finding ideas better than I can find them is both very exciting and also terrifying. But this year, I'm going to lean in to the systematic approaches that I have. It doesn't mean I'm just going to go blind buy the pound dollar. I'm still going to, analyze the chart, find setups, manage risk, enter and exit appropriately. All of that is still applicable. But when the Edge Finder gives me a bullish reading, I need to take it more seriously, or the bearish reading. I do that already, but I need to lean further in. That's what I'm trying to express with my trading in 2025. I want to get more systematic, not less, right? So right now, if I take a look at current ideas from the Edge Finder, and we go remove the neutral readings, look at this. We have S&P 500 bearish readings. That is rare. Dow Jones, Russell, Swiss yen. I did act, so I will pat myself on the back about the yen stuff. The yen screaming bearishness like a month ago was an excellent idea that the Edge Finder spotted, and then I actually executed on that trade idea. So, I just need to not second guess kind of what the data is showing me. If the economies of the world are upbeat or downbeat or missing or beating, that's the kind of sweet sauce that I look for in terms of creating the right setup. Enough. Next segment, I suppose, is metals. Marco and Miko, I guess the last time we spoke, all of us kind of think that metals are in an overall upward trend. But I'm curious, especially with Miko, with the silver versus gold concept that we regularly talk about on the channel. Silver or gold right now, and where would you look at possible entries?
So with silver, it's a little bit awkward, to be honest. I'm still very bullish on the pair. However, my focus has kind of been on this big level here on the daily chart. So I'm just going to see what we do in reference to that level. Does price break through, or do we start to hold? Because last week it looked like price was breaking through. Then we had a kind of a meltdown. I don't know if that was the week before, but we had a bit of a meltdown. I'm still looking to see if I can get some longs back to the high, but this has proven to be a bit of an obstacle. So if we can clear that, that'll be fantastic. And then pullbacks afterwards is something I'll be interested on. Gold as well, I've been looking for buys, but I wanted the price to come a little bit deeper before I do intervene. I like the swing high here. We had a really aggressive sell last week, so I was hoping we could come a bit further to the downside. Hasn't quite seen that. I wonder if gold's just going to fly. It's still a very bullish market, so I wouldn't be surprised, but I'm not really looking to get involved until we get to at least 27.89. Really nice prior high there, and that would be my area to buy. So I'm still bullish on both of them. In terms of entries, that's kind of the area I'm looking at, 27.89. And silver, don't really have an entry yet, but I just want price to be trading above that zone, and then I will start looking for some entries. But long term, still very much a buy.
Okay, yeah, fair enough. I feel like gold has a little bit of a just kind of a stubbornness in terms of going too far down right now, because of the kind of state that we're in, where governments around the world are all kind of tense and up in arms, and there's just the concern about what's happening in the Middle East and Ukraine, and then of course the U.S.-European relations. There's just many different kind of uncertainties, not to mention of course the Canada, Mexico, U.S. kind of trifecta concerns. There's all sorts of just drama everywhere, and that to me seems like a good reason that gold can remain supported. But I too like that idea. Like if you get a larger, I have a long position at this current area where we found support. If that breaks, if that fails out, I'd happily try again at 27.80, as long as the fundamentals for me, the description I just gave still kind of applies. If that scenario is still there, I like that idea a lot too, that 27.80 level that you discussed. Yeah, same question to Marco. Metals, gold, silver, how's the momentum looking, or is this set to continue, or do you think it's overdue for a sell-off?
Yeah, so again, I've started trading this second strategy with the edge finder, and my old strategy kind of a hybrid on the higher time frames, and gold has been a very bullish signal. So I did get in on this 1 hour chart with this little break and retest right here, with the stop loss placement according to the 4 hour, this sort of a swing low. And that's the general game plan. I'm gonna, if it goes into profit, I'll try to trail it on the 4 hour, and if it stops me out, it stops me out. But again, it's a fundamentally very bullish story. In terms of momentum on this 1 hour chart, if I had to make a decision, it would be a bearish one because of these large bearish legs, which I don't really like. Does that mean I'm gonna exit the position? No. So those are kind of two separate strategies. But for my first strategy, this would not be a good entry. What I'm seeing right now, I'm seeing a bit of a pause, a bit of indecision. But in terms of the second one, fundamentals looking great. Overall story on the 4 hour looking pretty good as well. And the daily looking nice with this sort of a drop, a bit of a pullback. But again, overall, a lot of momentum behind it, and a general risk off sentiment, which is of course good for gold. So I'm bullish.
Yeah, and I find it really interesting too in terms of yields. A little bit of a divergence. I know this is kind of a sidestep story, but the announcement from Germany about the massive amounts of spending that is intended. I think it was, could be wrong. Somebody correct me. Is it 800 or 600 billion euros expected to be funded towards war efforts? Germany seems to be kind of stepping up, taking the lead on the whole situation with the breakdown in U.S. Ukraine stuff. That reaction here, jumping in the euro 10 years. I mean, the euro got stronger off of this, but also this yield is confirming that, okay, that's a huge amount of spending. Who's going to pay for that? Well, the ECB might be doing some printing. That's the idea of jumping yields, higher expected inflation, etc. So, and also, arguably massive military spending. It's like the military industrial complex. It stimulates massively the economy, at least in the short run, because just money floods in every direction. So, it's an interesting time. Meanwhile, to counteract that, we see the U.S. yields coming down. This is part of the reason I think why the dollar has been cratering. Has been, U.S. Yields and inflation. Inflation's still kind of up, but expected slowdown in a lot of government spending and, maybe the economy as well. We'll see. But really interesting time to see everything going on. Indices also have been. This one I'm really curious to get you guys' thoughts on, because I think for the first time in quite some time, we have some momentum here to the downside. We've been in just this perpetual uptrend. And I guess I want you guys to share with your thoughts. Is this rolling over and starting a downtrend, or is this still innocent till proven guilty? Miko, what do you think? NASDAQ, S&P, any of them, take your pick. What do you think about these?
Yeah, it's an interesting one. They're coming up to some levels where if they do break, I would say it is in a bearish market, at least on the daily time frame. And I would expect to see some lower lows and lower highs form. This is the level which I'm paying a lot of attention to on S&P 500, which is just about the last low, which gave us the last high. So as long as we're consistently making high lows, I still deem the market to be bullish. If we start breaking through lows, then I am looking at that with a bearish lens. And at the moment, we haven't quite broken through that level yet. We're still hanging on for dear life. We've got a few wicks here on the 2 previous daily candles. So the market is still paying respect to that level. But of course, potentially maybe today we break through, or maybe today we leave another wick. So I want price to really give me a confident break. And that's when I would signal that S&P is in a bit more of a bearish climate. We could be seeing some nice shorting opportunities, particularly in the lower time frames for that one. Likewise with NAS as well, we've come into some big levels of support. It looks like price is trying to clear the level. Again, not really seeing a clear-cut break, so I do want to see a bit more momentum, and then I would be pretty bearish on NAS as well, looking for some more downside. And at US 30, I don't think we're at a big level yet. We haven't quite made it to this area. If that level breaks, then I would be bearish in US 30. So we're kind of on a make or break it level. If we do see a lot of momentum below that, I would be pretty bearish.
Okay. Yeah, no, I mostly agree. I mean, you've got some key critical levels. One of the easiest ones to point out that everybody kind of seems to love on Wall Street is the 200-day moving average, which I've just pulled it up on my screen here. You can see that we have just tapped into the 200-day moving average for the S&P 500. And what's critical here, I mean, I guess it could be slightly different if you're looking at SPY, which is, still a little bit lower. But the point is, to what you've just said, Miko, we're hitting some real critical levels, and how we react here could set the tone for the next couple of months. I mean, if you just have a big flush through those lows, I imagine that a lot of Wall Street algorithms are going to trigger, oh my gosh, we've broken that 200-day level of support, and can't seem to find any buyers. But
markets are a bit crazy at the moment. Dollar continues to fall off a cliff. The yen is doing very, very well at the moment. The pound's up, the euro's up. So we've had, still in essentially a complete flip. So I know previously the narrative essentially was just buy the dollar, sell dollar crosses. It was very, very simple, very straightforward. There was, you could have had 2 brain cells and just click sell, and you would have made money. Now it's not quite the case, because obviously the dollar is free falling. Really, I don't think there's any other way to describe it. The euro's up again, pound's up. So it's more dollar cross longs at the moment. Problem is, a lot of these markets are still very extended. So I know yesterday we were discussing the idea that the market is, a lot of the markets, especially euro pairs, are very extended. So it's not a case of I'm not bullish. It's more a case of just waiting for the markets to pull back now, because you can't buy here. Let's be realistic. I think if you're buying here, it's either a little bit of FOMO or FOMO. I don't really know why else you would buy it at the current level, unless you're willing to hold it for quite an extended period of time. So as far as I'm concerned, I'd like to see price come back down to around 105, and retest that level, and then maybe continue to the upside. It seems like not the Fed, the ECB had a hawkish cut, so they reduced their rates by 0.25 or 25 basis points. What did they say? They were doing a less restrictive. So I'm just trying to think of I can't remember the exact words, but anyway, it's less restrictive going forwards by the sounds of it, and they're taking it on a data by data perspective. So that does lead me more towards actually going long on the euro at this point, as well as Germany's increase in infrastructure budget and reduced on the debt restrictions, which is boosting the investor sentiment. So we've got that. We've got the dollar falling off a cliff. It seems pretty straightforward at the moment. The central bank divergence isn't really the same anymore, which is a little bit unfortunate. But either way, the point stands. On the euro crosses, we've got euro pound, very, very extended at the moment. If I can find it, euro pounds here, pretty aggressive move to the upside. Very typically, this is the behavior we see on this pair, where we'll have an aggressive move up followed by an aggressive move down. So I think at the moment the markets are just processing, digesting, and pricing in the new data and the new landscape of the markets or the economics, and then we might see more what's the right word, I guess, more peaceful or more normal conditions, if you will. The FOMO lords buying euro as we speak. Yeah, I mean, if you've seen the retail sentiment, they're actually selling very, very heavily, and they've been essentially completely counter the move. So let's just actually compare. So retail sentiment. Actually, let's do history on euro dollar. So they went heavily short on the 4th of March. Euro dollar rocketed on the 3rd, had the first bullish candle on the 3rd and rocketed on the 4th. So they essentially were preparing to go short on this bullish candle and then got heavily short on each daily candle, which is quite amusing. I think we all know the retail lose, but they've essentially only lost money in probably the most easy market to trade for the past 6 months. So there you go. They got massacred. They absolutely did, which, what can you do? It's, this information is very public. I make videos, I do streams, Nick does videos and streams. If they're not willing to find the right information, then that's on their heads, not ours. Euro AUD, I'm actually short here. I've having laughed at the retail traders for going short. I am short, but the reason is it's not really a macro play. I'm more looking for a mean reversion play. So this is, basically just a technical move, looking to hold this one for, could be tomorrow, could be next week, could be the week after. Who knows? But I spoke about this one in a bit more detail yesterday, so I won't go into it again today. Equities, I'd quite like to start going short on the NASDAQ. I think this will be a really, really nice one, actually. If we could see, I don't really know what I'd want to see here, actually. Probably just a break of the support. Then I would look to just go short and just trade it zone to zone or level to level. So I'd be looking for something very similar. So breakdown of the support, retest, and then continuation is, the basic way I go about swing trades is wait for the break and retest, and then try and join in on the continuation. GNU, you shorted euro dollar. Fair enough. That be on your head. Actually, I'm just going to move over the chat so I don't have to keep twisting my neck to read it. I could totally imagine Nick and Chandler and James laughing at our chat. Yeah, I've got no idea what you guys are talking about 80% of the time. Currently looking for shorts on gold. Interesting. I was looking to go long on gold, actually. I'm not sure if I will, but the idea is there. Oh yeah, that's what it is. So I'm just seeing the problem is that well, not the problem, but the thing is with the markets at the moment is we've just had the rate cut and the forward guidance from the ECB, we've had unemployment claims, and tomorrow we've got more labor data from the US, and we've got the Fed speech as well tomorrow. So I think the markets are pretty much just on pause or waiting, at least foot off the gas a little bit for tomorrow's data. The other thing is we've got this bearish weekly engulfing candle here. I don't really want to buy into that. Obviously, it's closed, but I'd like to see this week's candle just close bullish before I start buying. That would just confirm to me there's a little bit of bullish momentum, and I'm not buying into a strong bearish weekly candle. The H1 looks healthy, actually. Had quite a nice rejection off the support. I'm not sure if ball out's here, but he won't appreciate that. But yeah, I quite like this idea here. I didn't buy it again. I'm just waiting for tomorrow, but technically it looks very, very solid. So we'll see. So maybe on Monday or the start of next week, I'll be a bit more interested in gold. I said that we'll realize when the crash is about half of about to end what we are crashing. It always looks like a pullback when it starts. That's very true. I think if I'm understanding what you said properly, we don't realize it's a crash until halfway through. It is a very good point, actually. Ball outs in gold shorts already. Fair enough. James, we need to chat in private. Explain my support resistance hate and why you'll definitely join me. Yeah, ball out. Send me a DM on Twitter if you want to. BRS, should you enter long dollar Swiss? I'll tell you what, if you can tell me a reason that you want to enter on dollar Swiss, I'll give you my idea. But I'm not just going to tell you, because I think that's making it too easy for you. Justify your idea first. What do I think about Euro Yen? I like Euro Yen shorts. I think at the moment it's a little bit tricky, just because obviously we've had the hawkish cut. So I think in the short term you might get stuck in a little bit of noise, but long term I'm still very bearish on the yen crosses. I don't see any problem there. The euro might put up a little bit more of a fight than we initially planned, when I first started talking about the yen longs, but yeah, no long-term issue, I don't think. USD JPY, I'm going to short, but what should be the target? 141. I mean, I don't know. I was asked this question today by someone in my stream, and the answer was actually very, very simple. When you're looking for a long-term position trade, or even a longer-term swing trade, what you've got to account for is technicals don't really come into play that much. Sure, you can use some technicals as benchmarks. You can say, okay, well, dollar yen's dropped 2%, or we've just broken this 140 key level or whatever. But because the yen long idea is not something I really care about short term, it's a long play. And when you're doing that type of thing, the main thing to pay attention to is the economic developments. So in theory, what you could do is, you could go short here, trade it down to 141, roughly around here. But then you could, if you're just looking at hard tip, probably you could miss this whole move. I'm not saying it will do that. I'm just saying there's potential there. If the economics stay in favor of dollar yen shorts, and obviously you could trade it all the way down. You get the point. I'm just saying, I think there's a lot more potential than just 141. But if that's the way you trade, you just want to trade it from sort of resistance to support, completely cool. I think it's definitely possible to happen.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.